I want you to picture this: a closed White House room, nearly 20 of America's most powerful oil executives, one president, one number on the table, $100 billion, not government money. Their money, the goal is simple, at least on the surface: rebuild Venezuela's broken oil industry, pump more oil, push global prices down, bring relief to consumers like you. Donald Trump offers a guarantee: total security, total safety, no footnotes, no fine print, just a promise. But here is the line that changes everything. These same companies have already lost billions in Venezuela. They walked away once, they came back again, and now they are being asked to return a third time. If you want to understand how power talks to capital, how risk hides behind confidence, and how global order is quietly reshaped, stay with me. Because before we ask whether this plan can succeed, we must understand what is really being demanded and why this moment matters far beyond oil. Let me slow this down, because this is not just an oil deal, and it is not just about Venezuela. At its core, this is a question of risk versus control. On one side, a president arguing that American power can tame uncertainty, that security guarantees can replace broken institutions, that political will can override market fear. On the other side, executives who live in a different reality. They answer to shareholders, they remember past losses, they operate in legal systems, not speeches. Venezuela today is not just poor. It is unpredictable. Its laws shift, its governments fall, its contracts dissolve. That is why the word uninvestable matters. It is not an insult, it is a warning. What Trump is really asking is this: can political authority substitute for trust? Can power stand in for stability? Because once money enters a country, it becomes hostage to the system it enters. And to understand why this question is so dangerous, we need to look backward. We need to understand how Venezuela reached this point. To understand this moment, we have to rewind. Venezuela did not collapse overnight. It eroded over time. Its oil industry was once a source of immense wealth. Then investment dried up. Infrastructure aged, maintenance stopped, production fell. For foreign companies, the problem was never geology. The oil was there. The problem was the system around it. Rules changed without warning. Contracts became fragile. Political power replaced legal certainty. Executives learned a hard lesson. Capital flows toward predictability, and it flees instability even faster. That is why American oil companies pulled back, not once, but more than once. Billions were written off, trust was broken, risk became structural, not temporary. Today, Venezuela's energy sector is described as decrepit, not because of a lack of resources, but because the framework that protects investment no longer functions. And this is the crucial point. When a system breaks, money does not fix it. Money exposes it, which is why the next moment in this story is not about long-term decline. It is about a sudden, explosive proposal. The first shock comes quietly, in a meeting room, not on a battlefield, not in a market crash. The president looks at the executives and raises the stakes. $100 billion from private companies into Venezuela, not someday, not conditionally. Now, this is not framed as a suggestion. It is framed as an opportunity. Lower oil prices, $50 a barrel, immediate relief. But when the executives respond, the tension becomes visible. They do not talk about profit. They talk about loss, billions already gone, past ventures that failed, returns that never came. One executive says it plainly: Venezuela is uninvestable. The reason is not ideology. It is structure, a broken legal system, unreliable commercial rules, Trump's answer is blunt. They know the risks. This is the first crisis point, because risk in this moment is not abstract. It is real money, real shareholders, real consequences. And when a government tells markets to accept uncertainty, it signals something deeper. That power is willing to move faster than trust. Which leads us to the most important question of all. What is really being offered in exchange for that risk? The answer lies beneath the promise. Because what Trump is offering is not just access to oil. He is offering a substitute for institutions. Total security, total safety, those words are doing heavy work. In stable countries, companies rely on courts, on contracts, on predictable rules. In Venezuela, those systems are weak, so the proposal replaces them with power, protection instead of law, assurance instead of structure. This is the hidden mechanism. Oil companies are being asked to trust the US government more than the Venezuelan state and more than the legal framework on the ground. The plan goes further. Oil revenues would not simply flow to Caracas. They would move through accounts controlled by the United States. Control replaces sovereignty. Oversight replaces autonomy. From a political perspective, this looks decisive. From a business perspective, it is unprecedented because markets do not price promises. They price systems, and no verbal guarantee can fully insure against regime change, policy reversal, or political backlash. When security depends on who holds power, it expires the moment power shifts. That is why this proposal feels bold and fragile, and why the next shock in this story is not economic, it is geopolitical. The second crisis expands the frame. This is no longer just about Venezuela or oil prices. At that same meeting, Trump speaks openly about territory, about power, about taking land. He warns that if the United States does not take Greenland, China will, or Russia will, the easy way or the hard way, he says. Suddenly, energy policy merges with expansionist logic, because this is the same worldview. Control resources, control territory, control outcomes, but this rhetoric carries consequences. Greenland is tied to Denmark, a NATO ally, a pillar of the post-World War II order. Questioning its status does more than provoke headlines. It shakes assumptions. Allies begin to wonder where guarantees begin and where they end. Investors notice this too, because if borders sound negotiable, contracts feel fragile. If sovereignty can be overridden, so can commercial frameworks. This is the second crisis point. Not because of what is said, but because of what it signals. A shift from rules to leverage, from institutions to force. And when that shift happens, markets do something predictable. They hesitate, which brings us to the people who feel this uncertainty most directly. This is where the story reaches you. Not in meeting rooms, not in diplomatic cables, but in your daily life. You are told this plan will lower prices, cheaper energy, less pressure, immediate relief. But behind that promise sits volatility. When investments depend on political guarantees, instability becomes contagious. If production surges and then collapses, prices swing, supply fractures, costs return, you feel it first at the pump, on your utility bill, in the price of food and transport. There is another layer. Venezuelan workers are promised jobs, but jobs tied to uncertain power do not last. They rise quickly and disappear just as fast. For you, this is not abstract geopolitics. It is predictability versus shock, stability versus sudden correction. That is why these decisions matter. Because when systems fail, individuals absorb the cost. So before you accept the promise of cheap oil, ask a harder question. What happens when security is political, not institutional? And what happens to you when that security fades? Now widen the lens. Because what happens in Venezuela does not stay in Venezuela. Oil is a global language. When supply shifts, every economy listens. Trump's proposal aims to flood the market. More barrels, lower prices, immediate impact. But global systems react. Other producers adjust. Allies recalculate. Rivals respond. If US backed Venezuelan oil surges, it pressures OPEC. It reshapes leverage. It forces new alignments. At the same time, routing revenues through US control raises alarms far beyond Latin America. The United Nations calls it interference. Allies see a precedent. Rivals see opportunity. Because if one nation can manage another's resources, the rules feel flexible. And flexible rules invite testing. This is how local decisions become global signals. Markets read them. Governments react to them. Stability absorbs the shock or fractures. Energy, sovereignty, and power are now braided together. And once they are, there is no clean exit. Which is why the final question is not whether this plan is bold, it is whether the system can absorb it. And to answer that, we have to look forward to what comes next. Now consider the futures that branch from this moment. There are three. The first is the optimistic path. Investment flows, production rises, prices fall, security holds. In this version, political guarantees last long enough for companies to recover confidence. Institutions slowly rebuild. Venezuela stabilizes, at least partially. It is possible, but it requires continuity of power. And restraint, the second path, is the middle ground. Capital enters cautiously. Production increases unevenly. Politics interferes. Prices dip, then rebound. Uncertainty becomes the norm. Neither collapse nor success. This is where many systems end up, functional but fragile. Then there is the third path. Power shifts, guarantees weaken, legal disputes erupt, investments freeze, production stalls, losses return. In this future, the promise of control exposes the absence of institutions. And here is the deeper insight. Systems do not fail because of ambition. They fail when ambition outruns structure. You can force outcomes for a time, but you cannot suspend reality indefinitely. Which future emerges will not be decided by oil reserves. It will be decided by whether rules outlast power. And that brings us to the final reckoning, because this story does not end in Venezuela. It ends with a choice about how the modern world is governed. Let me leave you with this. This proposal is not really about oil, and it is not really about Venezuela. It is about how power sees the world. When leaders believe control can replace institutions, they move fast. They promise certainty. They demand confidence, but history teaches a quieter lesson. Markets trust systems, not speeches. Stability comes from rules, not reassurance. And security that depends on power lasts only as long as power does. You, as a citizen and as a consumer, live inside the consequences of these choices. In prices, in volatility, in global tension. So when you hear promises of easy solutions, pausa. Ask what holds when authority fades. Ask what remains when confidence is tested. Because the future will not be shaped by the boldest declaration. It will be shaped by the strongest institutions. If this analysis helped you see the system more clearly, share it. Continue the conversation and stay curious. Because the next story will ask the same question again. Who do we trust to hold the world together?